Hi everyone, welcome to FOREX Trading Empire YouTube channel. In this video, I'll be teaching you guys how to trade a simple 4-hour gold strategy. And in this video, I'll be explaining how to trade it correctly, what are the right side of the charts for you to focus on, what are the things you need to know before trading this strategy. Before I start, make sure to like and subscribe to the YouTube channel. So first, before trading this simple 4-hour gold strategy, you need to understand that we'll be using two time frame. Now, these two time frames will be our major time frame, which is going to be the 4-hour time frame and the 15-minute time frame. Then next, you need to learn how to identify a swing high and a swing low. Now, this is very important because this will tell you your trading range. The strategy is based off a trading range. You need to understand dealing range and trading range for you to trade the strategy. But I'll be teaching it in a very simple and easy to adapt and easy to copy way on how to use your swing high and a swing low. So you need to learn how to identify a swing high and a swing low. Second, the point of interest to be focusing on is going to be the fair value gap and the order block. These are the major points of interest to be focusing on going into this simple 4-hour gold strategy. Now, how to identify your bias? Well, so after we learn how to identify your swing high and your swing low, focusing on those points of interest, we'll be using those concepts to identify bias, knowing our daily range and knowing where we'll be trading to, what is going to be our trading range going into a week or a day, how to buy, when to buy and sell. Now, this is very important. You need to know those specific times where you need to go into lower time frame to look for your entry. So I will be explaining this video. So let's move to the chart. First, let's talk about swing high and a swing low. So in a swing high and a swing low, what makes a swing high and a swing low? First, let's talk about a swing low. On a swing low, you need to see three candle formation. The first candle need to fade to go lower than the second candle, and the third candle need to fade to go lower than the second candle. Whenever you see the second candle lower than the first candle and lower than the third candle, that is a swing low. Now, on a swing high, you need to see the first candle not trading higher than the second candle. You need to see it stay below the second candle's high. The third candle is not supposed to go higher than the second candle's high. So in a swing high, you need to see the second candle higher than the first candle's high and higher than the third candle's high. That makes it a swing high and a swing low. So learning what's the swing high and a swing low, I've talked about it in the previous lectures and in the YouTube channel. You can still go through those videos to understand more about what's a swing high and a swing low. But this is the basic way for me to explain what is a swing high and a swing low, which here is a swing low and here is a swing high. So I'm on the 4 hour of gold. So on the 4 hour time frame, first I'm going to be doing an example, showing you guys an example from a recent trade which was executed from this 4 hour fair value gap, which currently now is close to TP. I'm going to explain on how I got involved in this trade. Now, if you want to take advantage of trades like this on my own personal setup, you can check on the description to chat me directly, where I'll be sending you the link to my own personal signal group, which for you to have access to that group, you can just hit me up directly on my Telegram profile, which the profile link is being linked in the description below. Now, this trade is a recent trade, and I used this 4 hour simple strategy to execute this trade, which I'll be explaining now. First, you identify your swing high and the swing low. Here's the swing high. When first candle, the second candle, and the third candle. You can see the second candle went higher than the first candle's high, and the third candle failed to go higher than the second candle's high, which means the second candle traded higher than the third candle's high. And a swing low, you can see here's the first candle, second candle, and the third candle. The second candle traded lower than the first candle, and the second candle traded lower than the third candle. First, you identify your swing high and a swing low. So here's the swing high and here's the swing low. Second is you mark out your order block and your fair value gap. Now, I already marked out the 4-hour fair value gap. Now, traders mostly ask me a question on which fair value gap to focus on when there is multiple fair value gap, which in this example, there are 3 fair value gaps. All you have to do is focus on the current fair value gap price I've retraced to, because if price is in a higher demand to go lower, it will use the first fair value gap. But if price is seeking a premium price before trading lower, it will go for the mid fair value gap. But if price is seeking to trade to the other block, it will trade to the highest fair value gap, aligning with the other block. So use all the fair value gap to your advantage. Just make sure you mark out your order block and your fair value gap, which in this example, you can see here is the order block. Now, to be more precise, this is the breakers block because is in the state in change of delivery from this uptrend to this downtrend. First, price traded higher, took at this high, a little to an equal high, but price traded above the high, did a shift in structure, making it a breakers block. But you can still call it an order block, it's still the same. There's a slight difference between an order block and a breakers block, which here is the difference. A breakers block, you can identify it in a state in change of delivery, mostly when price is changing a trend of that time frame. That is the breakers block. Now here's the breakers block and here is the fair value gap. Now you can see the price after forming the swing low, price traded to the 4-hour fair value gap, traded lower. Now you know your bias. Whenever price retraces to the 4-hour fair value gap, you look for sell. If it retraces to the daily, sorry, if it retraces to the other block, you look for sell. And if it trades deeper to the mid range of the other block, you still look for sell. Going into more details on how to trade this specific trade plan, which was explained in the Forex Trading Empire 2025 mentorship program. You can check that mentorship program. All will be uploaded in the YouTube channel, which is currently being uploaded to the YouTube channel as to when this video is being posted. So you can just look at the playlist and you'll find the 2025 mentorship program. Now we already know our bias. We know where we're looking for price to trade. So we're looking for price to run the sell side liquidity, and we are anticipating lower prices as soon as price trades to the point of interest. And our next drawn liquidity is to see price take out the sell side liquidity. Now, in this example, price haven't taken out the sell side liquidity. I just saw it and I found that it's a very simple strategy for you to easily copy and trade if you learn how to mark out your swing high and swing low, your point of interest, and how to define your bias, which the bias is a down trend. The swing high and the swing low will help you to identify the current trend in that time frame, which in this time frame is the 4-hour time frame. And your drawn liquidity is the sell side liquidity. Now, as soon as price forms the swing low, trades to the 4-hour fair value gap, that is the time you go to your lower time frame to look for your entry. That is the time for you to sell, which in this example is a sell example. Now we understand where we are looking for price to trade to, which is the sell side liquidity. The next time frame for you to move to is the 15-minute time frame. On the 15-minute time frame, that's the time frame you look for your entry, which I explained at the early part of this video that we'll be using two major time frames, which is the 4-hour and the 15-minute. On the 15-minute time frame, price traded lower, did a shift in structure, trading through this fair value gap, making it an inversion fair value gap. Now you can trade directly from the inversion fair value gap, or you just use the fair value gap, which in this video I'm showing you guys how to use directly a fair value gap and an order block. So entry at the fair value gap, whereas retrace to the fair value gap, respected the fair value gap, which was the entry. Traded lower, retracement back to this order block. Now, this is not an order block I personally use, but price retraced to the other block, respected the other block, traded lower one more time. Now, price haven't taken out the sell side liquidity. price retrace back to this other block, which is the last point of interest price is currently respecting before taking out this low. Now here's the fair value gap, which might lead to the trend lower to run out the sell side liquidity. But clearly you can see how the 15 minute is easy to align when there is a 4-hour bias. You identify your bias with the concept which was explained. 15 minutes, you use it for your entry. As soon as the 15 minutes is in a downtrend or is in a trend aligned with the 4-hour, those are the times you look for your entry and wait for price to trade to your target. Now I'll be doing an example on a buy scenario, which in this example, this is the sell scenario. I'll be doing an example on a buy scenario. So first, you identify your swing low to a swing high. Here's a swing low. First candle, second candle, third candle. Second candle traded lower than the first candle. Second candle traded lower than the third candle. Swing low, and here's a swing high. First candle, second candle, third candle. Third candle traded higher than the first and the third candle, making it a swing high. Fair value gap, here's the fair value gap. 4-hour fair value gap. Other block, here's the other block. Retracement to the fair value gap on the other block. As soon as price retraces to the first fair value gap, that is your entry after the swing high. So here is your first entry after price retraces to the 4-hour fair value gap. Your target is to see price trade to the buy side liquidity, which is your next draw on liquidity. So on the 15 minutes, you look for your entry, the 15-minute entry for price to trade to the 4-hour buy side liquidity. A very simple process. Here is your trading range from the swing low to swing high. On the 15 minute, retracement to 4-hour fair value gap, shift in structure. Now, identifying the 4-hour fair value gap, waiting for price to retrace to the 4-hour fair value gap. Those are the times where you are supposed to be patient enough to wait for price to give you those right moments for you to enter the trade. On the 15 minutes, shift in structure, retracement. Now, this is a breakers block, or you can still call it an order block. I'll be using an OB and to change the animation. Retracement to the breakers block, respected the breakers block. If you're using a fair value gap, price traded higher, give you an opportunity for you to take an entry at the fair value gap. Price traded higher, retraced back to this other block, respected it. Another swing high, retracement, fair value gap, higher, fair value gap. So you can see there are multiple ways for you to take advantage of this setup. Now, the one thing I like about this strategy is that it gives you a high reward to risk trades, where you're holding trades for around a 1 to 5 and a 1 to 6, and even higher depending on how deep price traded into the 4-hour price range. Your target should see price go for the buy side liquidity. So the setup we are supposed to look like this. Now, this setup is well efficient when you are using gold. You just need to be patient enough to wait for those gold retracements before catching the next swing high to the next bull run. And this is your setup. So that is it for this video. Make sure to like and subscribe. See you guys in the next video.